We live in a world where the need for social responsibility and environmental sustainability has never been greater. We're constantly bombarded with news about climate change, social inequality, and other pressing issues that threaten our planet and society. But here's the good news. We can all do our part to make the world a better place, whether it's by reducing our carbon footprint, volunteering in communities, or even supporting companies that prioritize ESG factors. Now, you might think that investing with a conscience is a boring or an unimportant topic. But did you know that ESG investing is actually a growing trend among investors? So what exactly is ESG investing? It's all about investing in companies that prioritize environmental sustainability, social responsibility, and good governance. And the best part, these companies aren't just doing good for the planet and society, they're also delivering strong financial returns. But don't take our word for it just yet. We'll be diving into the data to see if investing in ESG can really deliver strong returns for investors. We will also talk about ESG investing and the prominence it has taken in the Indian investing landscape. We will also talk about the ways you, as an investor, can be a part of this change. Let's begin. You're watching Informed Investorr, the third empire, and initiated by Research and Ranking. ESG stands for Environmental, Social and Governance, which are three key factors used to assess a company's business practices and performance on various sustainability and ethical issues. To break it down, environmental factors consider the impact of a company's operation on the environment, including things like carbon emissions, energy efficiency, and waste management. Social factors assess a company's impact on society. Now, this is a wide-ranging category that focuses on a company's relationship with people both within and outside. Now, these factors include metrics such as fair wages, employee welfare, community relations, and diversity and inclusion policies. Now, coming to governance factors. This evaluates the leadership and management practices of a company. This includes areas such as board composition, executive compensation, financial reporting transparency, etc. Now, coming to ESG investing, this is an investment approach that considers these environmental, social, and governance factors that we discussed. When we talk about ESG investing, it takes into account not only the traditional financial metrics of a company, but also the potential impact of their operations on the environment and society. Now, each of the letters ESG describes an additional lens that some investors use to decide whether a particular stock looks like a good buy. Now, the idea behind ESG investing is that by investing in companies that care about the environment, society, and has good governance practices, we can make the world a better place while also generating long-term financial returns. Though still at an early stage, ESG investing is becoming increasingly popular in India due to a number of factors. Now, one of the primary reasons is the growing awareness of environmental and social issues, particularly among the younger generations. The access to information enabled by social media has made them more sensitive to environmental, social, and other issues. As we know, India is a signatory to the Paris Agreement, and the country is committed to reducing its carbon footprint and committed to achieving net zero emissions by 2070. This has led to significant increase in investment opportunities in renewable energy, energy efficiency, and other sustainable projects which are attracting ESG investors. Now, Indian companies are recognizing the importance of ESG factors in their business strategy and incorporating them holistically to attract ESG investors and meet sustainability goals. Now, this is in response to the growing global trend towards ESG investing and the increasing pool of ESG-driven capital. Now, if you weren't aware, the Security and Exchange Board of India, that is SEBI, has also introduced a mandatory ESG disclosure framework for the top 1,000 listed companies in India from fiscal year 22. Now, this was done to increase transparency and accountability on ESG issues and boost investor confidence in the market. Now, more importantly, investors too are recognizing that companies that prioritize social responsibility and good governance tend to perform better financially in the long run. Now, this is because environmental, social, and governance risk can seriously impact a company's operations and profitability. By integrating ESG factors into investment decisions, investors are learning that they can potentially reduce downside risk and generate more reliable returns over time. ESG investing has been shown to generate strong returns by identifying companies that have strong ESG practices and avoiding those that do not. Let's talk about this. Now, it is worth noting that in markets like India, ESG focus is relatively nascent, but the MSCI India ESG Leaders Index has outperformed the MSCI India Index over various periods as seen on this chart. This MSCI India ESG Leaders Index is created and maintained by MSCI. It compares the performance of companies in India that have high environmental, social and governance ratings. Now, just like the MSCI ESG Index in India, we have an index called NIFTY ESG Index. The Nifty 100 ESG Index tracks the performance of companies listed on the National Stock Exchange of India. Now, this is based on their ESG credentials. Now, the index is again designed to provide investors with exposure to companies that demonstrate a strong commitment to sustainability, social responsibility, and corporate governance practices. Now, when we compare annual returns, Nifty ESG has outperformed the broader index every year from 2014 to 2022. Though it performed better than Nifty 50 and has posted positive returns for 8 consecutive years, it has turned negative between the year 8th May 2022 to 8th May 2023, underperforming the benchmark Nifty. So what caused this sudden underperformance? Well, there are 2 reasons. Firstly, the Nifty ESG index has a high weightage in financial services and IT stocks. While financial services stocks have been doing well, IT has underperformed. This means that the ESG index heavy reliance on this may have led to the underperformance. Secondly, funds that follow ESG norms have also underperformed lately due to a lack of energy stocks in their portfolio. ESG investing typically avoids companies that are heavily reliant on fossil fuels, which means energy stocks are often underrepresented in ESG funds. Now, as energy stocks have seen a strong performance lately, the lack of these stocks in ESG portfolios may have contributed to the underperformance. Now, we see that short-term performance may be disappointing, but the long-term benefits of ESG investing are still very much intact. In the past, investors primarily focused on financial metrics like returns, balance sheet, revenue, earnings when investing in stocks. However, with the world shifting its focus towards issues such as climate change, deforestation, carbon emissions, there is a growing need to support social causes and drive positive change. Now, if you're interested in fighting these causes, there are different ways you can invest in ESG firms. Number 1, you can take the DIY approach. If you want to identify ESG firms to invest in, rating agency CRISIL generally comes up with an ESG score for Indian firms. Now, the scores vary from 1 to 100, with 100 being the best ESG performance. Now, a higher ESG score not only makes a company a good potential investment, but also showcases that the firm is working for the betterment of society. But of course, you can't just rely on just this one parameter. Now, if you lack time and expertise to invest in stocks directly, you could also invest in ESG mutual fund schemes available in India. These mutual funds invest in companies with strong ESG practices and exclude companies that harm the environment or society. Now, ESG funds are still in a very nascent stage in the Indian market, with most ESG mutual funds only launched very recently. At the moment, there are a total of 10 ESG funds in the market, a number far lower than the global peers, whereas the US and the UK have over 500 ESG funds each. Now, the reason for such underpenetration is simple. Indian investors are still relatively new to sustainable or ESG investing. However, the Security and Exchange Board of India, that is SEBI, has encouraged ESG-based investing in India, allowing fund houses to launch multiple ESG schemes. Earlier, the fund houses were mandated to have only one scheme per category. Now, we see that though ESG investing is still early in India, it is picking up momentum. Now, let's talk a little on how ESG mutual funds are different from other traditional mutual funds. The difference is that traditional mutual funds are typically managed to maximize profits while ignoring the ESG factors. While ESG investing considers these ESG factors, they still don't offer something radically different from existing investment options. Now, most of the fund holdings are heavily dominated by banking, financial services, information technology, and consumer staple stocks, as these companies tend to score better to ESG. Now, that's very similar to that of the benchmark Nifty 50. Currently, there are only 10 ESG funds in the Indian market, but with more regulatory support and increasing investor interest in sustainable investing, we do believe that the number is expected to rise in the coming years. Now, this growth will expand the investable universe, including more renewable and new economy businesses, and allow investors to judge the fund's performance better over time. Having said that, ESG mutual funds in India are still in a developing phase, and investors will need to wait for a full market cycle to fully assess their impact. We also saw how ESG investments take a longer time frame to pay out, and we believe it is too early to evaluate their performances in India. Now, have you been thinking about investing companies that are doing good for the world? But have you also heard some people say that ESG investing is just all about the hype and just a gimmick, and that companies only do it for show? Now, is that true? Now, there have been instances of greenwashing where companies make superficial changes just to improve their ESG scores. But that doesn't mean we should dismiss ESG investing altogether. While it's true that there have been cases of companies engaging in such practices, it is important to note that these bad actors don't represent the entire landscape of ESG investing. Now, as climate change and other sustainability-related challenges continue to emerge, people, especially the youth, will increasingly demand transparency and disclosures around the issues that matter to them. And ESG investing can actually be a force for good. By focusing on certain defined ESG metrics, we can encourage companies to make long-term sustainable changes. Moreover, if you think about it, it can also help businesses in several ways. Businesses that embrace ESG principles are likely to bring stronger relationship with their stakeholders, including customers, investors, employees, and communities. Now, such companies are more likely to be seen as responsible and trustworthy, which can create goodwill and loyalty among their stakeholders. Furthermore, ESG can help businesses safeguard against any regulatory backlash in the future if they start working towards it now. Now, as governments around the world and even central banks around the world are increasingly focusing on sustainability and environmental protections, businesses that have already adopted ESG practices are more likely to comply with new regulations and avoid penalties. Lastly, ESG is not just a trend or a passing fad. It is a fundamental shift in the way businesses operate. Now, by integrating ESG into their decision-making processes, businesses can create long-term value for their stakeholders while contributing to the greater good of society and the environment. Now, while there may be challenges around measuring and standardizing ESG factors, the trend towards sustainability and responsible investing is likely to continue to gain momentum in the years to come. Having said that, this is me, Merlin Sushmita, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.